Hello and welcome to the big picture. Indian rupee has been going through some tumultuous times for the last nearly 1.5 years. After having reached unprecedented lows last year, touching over rupee 68 to a dollar, it had regained some ground earlier this year. However, it has once again started plunging. The fact that the Sensex has been on the upward trend till recently, even as the rupee fell, makes it interesting. Now, with even the global crude oil prices plunging to new depths every day, the rupee fall needs to be understood. Meanwhile, to what extent the crash of the Russian ruble has been responsible for the fall in the Indian rupee? What are the domestic factors which are responsible for this fall? Or is it just the international factors which are beyond the reach of the government, which has led to it? We will discuss all this today with Renu Kohli, former staff member, RBI and IMF, Ajay, former Secretary, Ministry of Commerce and Industry, Government of India, Professor N.R. Bhanumurthy, member, National Institute of Public Finance and Policy, and Rajiv Nagpal, Director, Elan Equity Services. Welcome to all of you. Bhanumurthy, how do you explain this fall?
Well, I think this the kind of volatility that we are seeing in the foreign exchange market as well as in stock market is largely because of some of the disturbances that we see in the international financial markets. Not really much to do with domestic, economic behavior. So, if you have seen the kind of swing that we have seen in both the foreign exchange rate as well as in the stock markets almost lost 1,800 points compared to what it has seen in the peaks, and even the rupee has depreciated almost a rupee. So, all these things, indicates that the external sector risk has, which started from declining in the international oil prices, and then the developments in the Russian ruble, and then the
Russian ruble thing is a recent thing.
Yes.
But Indian rupee has been consistently, facing this crisis.
No, but I think there are also
last year we saw, it falling.
Last year I think they were for different reasons, because the Federal Reserve's statements have made a panic in the foreign exchange market. And we have seen yesterday's developments in the Federal Reserves and the communique that we have seen. And that's one of the reasons why we have seen sudden rise today. Yes. So overall, I think the domestic financial markets are actually tracking the developments in the major economies like Russia as well as in US. So going forward, we should expect the same kind of disturbances until the oil markets and other commodity markets also settle.
Stabilize.
Yeah.
Renu, would you agree with that? How do you look at this?
Yes. There is little doubt that the disturbance is caused or triggered by external factors. Let me just add that there are a couple of domestic factors which have also added to this. One is, of course, the current account deficit, or rather the trade balance widened very sharply in November, much more than expected, and analysts' expectations for the current account deficit, which were around below 1% of GDP for the October-December quarter, now suddenly that has doubled. It's around 2% of GDP if we just sort of extend the October-November trade deficit. It is also surprising because it was totally unanticipated. Gold imports jumped, and not just that gold, but its non-oil, non-gold balance. And that was a bit of a surprise, quite a bit of a surprise. The second thing is also the Sensex overvaluation. It had run up, and a correction was largely expected. So there has been a bit of outflow mainly from equity, but the last 2 days, even the debt market, there has been an outflow. So it just complements what Bhanumurthy said. Okay,
Mr. Dua, Renu is talking about the current account deficit. Was it unexpected? How do you see this rise in the current account deficit? And is that one of the reasons?
I think the gold imports. Yes, the trade data wasn't very encouraging, which was released last week, and that did have an impact on the value of the rupee. Alongside that, I think there's some action of the Reserve Bank in mopping up dollars that has also resulted in the value of the rupee coming down. If you would recall, we had so far been seeing a lot of money, almost $16 billion has coming into India in the equity market by inflow from the FIIs.
Right.
Alongside that, about $25 billion has come much more recently into the debt market.
Right.
That means about $42 billion of money has come into the Indian market, in the Indian capital market in the last few months. The Reserve Bank was mopping up these dollars which were coming up, and that probably the intensity of buying up was a little more severe in the last few weeks, which impacted the value of the Indian rupee.
Renu, why do you think the RBI is mopping up the dollar, as Mr. Dua says? And
the RBI was purchasing until a few weeks ago. I mean, the gross intervention data that is there with a 2-month lag. So until 2 months ago, there is a lot of gross intervention, which is both sales as well as purchases. And the rupee was being kept range bound around 61, 62 range. But in the last 1 or 2 weeks, there haven't been at least market reports of heavy sales by the Reserve Bank. Now, to me, that reflects that the rupee, from a policy perspective or from a central bank perspective, they have allowed the correction, and justifiably so in my view, because all other currencies all over the world are depreciating, particularly those of the oil producer countries like Russia, Venezuela, etc. There is a lot of readjustment going around. And second is that, of course, your own fundamental balances, while inflation is under control, it's the trade deficit, the current account deficit, which has widened very sharply. So from that perspective also, it makes sense, because there haven't been any reports of any sales or, in support of the rupee in the last 1 or 2 weeks, when it has lost its value from 62 and then 62 plus, now currently trending at around 63. So that's my view. They haven't supported it, and they have allowed it to come down. So presumably, I guess it is more aligned to align it with the current account deficit. And also, from what I saw, the breakup of non-oil, non-gold imports, the commodities, the imports which really jumped were cotton raw materials, coal, iron ore. These are items on which there is domestic capacity, production capacity exists. So likely they are because of import substitution. It is replacing domestic production. Okay. And to me, it seems that because the rupee was, while it had depreciated against the dollar, in real terms, as per the RBI data, it was overvalued with respect to a basket of currencies. And overvaluation, as we know, a cheaper currency, a stronger currency, makes imports cheaper relative to domestic prices. So
you think that's why?
Straight away we can explain, for example, the jump in cotton raw materials by that logic. So probably it is also to discourage inessential imports and align it more with your new trade deficit or trade balance and current account deficit.
Yeah.
See, besides the factors
Girish, one figure which I forgot to mention.
Yes,
there's $24 billion worth purchases seem to have taken place during the current year by the Reserve Bank.
Yes.
Which is a fairly significant figure.
No, significant in what sense?
Volume.
Substantial.
It is
substantial amount of market intervention by the Reserve Bank.
No, you think that market, you think that intervention was not necessary to that extent?
No, I'm not saying that. What I'm saying is, and I totally endorse what was just said, it is more to correct if the rupee was becoming overvalued, it was moved towards more realistic value of the Indian rupee.
Okay.
And through buying up the dollars, the Reserve Bank has achieved that goal. The one other thing I like to add as a cause, to which was the meeting, the 2-day meeting of the FOMC in the United States, the federal banks. Till last evening, which was this morning for us, till they came out with the final statement, which said that they are going to be patient about raising the rates, interest rates in the United States. There was apprehension in India that if the raising of the interest rates in USA takes place too early, then there could be an outflow, capital outflow from India. And the money which is coming in the debt market in particular, as well as some in the equity market, we might see a flight out of it. And that could have further impacted the value of the rupee. But there was an assurance saying that despite what is happening in the Soviet Union, China and Japan, the Federal Bank is going to be patient.
Yes.
And the assurance that it's not going to be raising rates immediately has had a soothing effect on the value of the rupee today.
Today, yes. Rajiv?
See, besides the points which have been just mentioned, there is also one has to look into one trade which has been going on since March, which is long rupee and short yen, euro, and all the other currencies as a basket. Now, towards the year end, that trade comes for unwinding up. And when that unwinding happens, that kind of a similar profit booking pressure comes up, and we see a slightly volatile movement because it has been combined with what happened in Russia, then some FI selling taking place. All these together have brought in slightly higher volatility, which is something which is not desirable. But because that volatility is leading to us to certain level.
No, it did not desirable, but was it expected, anticipated?
Yes, it is expected. If you look historical trends towards the time when large trades get unwound, profit booking happens from large hedge funds. And one should realize that Indian rupee is not only traded in India. There are offshore markets where Indian rupee is traded. There are a large number of hedge funds who hedge their exposure to debt and equity in markets besides India. So all those positions, when they get settled down toward this part of the year, they tend to create volatility. And probably I wouldn't say this volatility is bad because it's taking us toward more realistic level of rupee, which is not bad for economy at all.
It's not bad for the economy.
Not at all. I mean, our exports have to remain competitive. We can't have a situation.
But what about the current account deficit? The high current account deficit suddenly,
Yes.
Why did it happen? We have been discussing this Bhanumurthy for the last over a year.
Yeah, quite some time we have been talking about the current account deficit. But I think the recent trends, as Renu already pointed out.
No, this gold imports.
Yes.
No, the government has decided that it will not, come down on that. It will allow the gold imports. You think that decision of the government is something which can be justified?
No, I think that decision to remove that 80-20 has come out all of a sudden to the market. I mean, I really don't know the impact of that policy on imports of gold at the moment. But if you see the trends in the past 2 months, the data that we have, we see that there is a sudden recovery, the rise in the gold, import of gold,
right,
which is actually creating a kind of a, disturbance in the external account. I think that's what Renu is pointing out. But this is because when there is no recovery in the industrial sector, recovery in the Indian economy. So the widening of current account deficit in the absence of recovery is something that is a cause for concern. So that that may be playing on the foreign exchange market. But as Rajiv has already pointed out, to some extent this is more of a year-end correction, which generally happens before the Christmas period. But it has become, the swings have become a lot more sharp because of the external disturbances as we see in both oil markets as well as in the ruble.
This, Rajiv, oil market, ordinary people, who are watching this program cannot understand this phenomenon which is happening. The oil prices have come down. Rupee is going up. How do you explain that?
Rupee is weakening.
Rupee is weakening, I mean.
See, this weakening has to be seen in light that this was required. I mean, rupee, just because oil is coming down, rupee will automatically correct in same proportion is not right. I mean, there is going to be one time lag. There is not going to be a simple and a perfect correlation. Another thing which, as you said about the gold import, if you look at from January or rather December 2013, the inventory level of golds have been gradually reducing. And if you look at those figures, we have...
That was because there was
yes, of course.
Yes.
There was a policy change. So when we came closer to the festival season and marriage season, the inventory build-up has to be done up. So September, October, November are the month where the inventory mismatch has been, kind of matched. Now, whether December gold imports figure are higher, that is something which has to be seen. But I doubt whether they're going to be as high as what they were probably in October. And that probably is going to change the give relief on CAD front also.
Okay, you think there will be a relief on the CAD front?
Yes, I'm expecting some kind of relief coming towards the December period.
Mr. Dua, do you see that relief on the CAD front? Because see, there are some people who are expressing some concerns about the CAD.
Yes, I would probably be one of them because the global economy is slowing down. As a result, our exports are going to be facing competition, much more competition. There is a demand shrinkage overseas, and unless we are able to drastically cut down our imports, in stagnant exports or falling exports may not be good for checking the CAD. I refer to not merely the gold issue, but also the black gold. That's the coal. The figures which are out in the public space today say that in the month of November, 16 million tons of coal, thermal coal, was imported into the country, and that's the highest figure which we have ever had. Going forward, I think the rest of the 3 or 4 months of the year are also going to see high levels of coal imports. And that's going to be impacting coal imports, and that's going to be impacting our import bill. Gold is not going to come down very much. Plus, iron ore. We've been an exporter of iron ore from India. For the first time in several years, we are now a net importer. Because of the mining difficulties which are being experienced, particularly with respect to iron ore in most states, we have turned into an importer of iron ore. And just now, there was also mention made about cotton.
Right.
So with all these 3 imports which are virtually inelastic, irrespective of price, international price, we are going to be importing these in the rest of the financial year. And with stagnant exports, I think there is going to be pressure on the CAD for the remaining part of the year.
Okay. Renu, how do you expect the government to tackle this situation? Because, here I'm sure it is not just the international factors which has caused this, but now if it has to be kept under control, government needs to take some measures. What kind of measures do you expect the government to take?
See, let us break the current account or the trade deficit in by items, and a lot of things have been said about gold, which I broadly agree with. The one thing is that which was left unsaid, so let me say it, which is that gold restrictions were removed end of November. So this big jump in gold which has come in November after an October surge is actually coming without it is not showing us the impact of removal of restrictions. So that 80-20 rule has been removed, and we will see the impact in December perhaps. To my mind, the current account was, in my view, the current account deficit was never sustainable. It was kept under control by artificial, props,
right.
And gold restrictions was one of them. The fact that the domestic growth is so weak is another one. So removal of gold restrictions in that light perhaps was perhaps an early hasty decision, and we cannot quite project as to how that demand will pan out. But my sense is that we should see the impact of the removal of restrictions, because that happened only on November 29th. So that's one thing on which the government has to be watchful. I don't know whether they can clamp down those restrictions again, perhaps maybe another nature, raise duties or something like that. But one has to be careful, particularly because in proportion to your import payments, in proportion to your current export receipts are extraordinarily high. And as Mr. Dua pointed out, export situation is not good. And in fact, if you look at the past 3 years, we always have this trend, which is about 2-3 months you will see exports rising, and we all say, oh, okay, exports is picking up. But then after that, there is a dip. And this year too, in 2014 as well, we had 3 months of good exports, then 4 months of no exports or negative contraction, and so on. So likely the trend is that overall in 2014-15, we will not see very ebullient or good export growth. So from that perspective, we need to be very watchful on the current accounts side. It isn't a sustainable deficit. It is still very much dependent upon short-term capital.
What?
And
Renu, sorry to intervene.
Short-term capital financing is essential.
Sorry to intervene. No, all this will put pressure on the rupee further. Can we see a further fall in the rupee?
It's hard to predict the currency, and I'm not really in that business, and I wouldn't really want to stick my neck out. But let me put it this way, that the good thing is that there is a certain level of reserves, which means that your external financing needs, or what you call, in parlance is called foreign currency liquidity risk, is well covered by reserves. So that matters for the confidence and market sentiments, and those are the ones which suddenly reverse and cause a crisis or a weakening of a sudden drop in the exchange rate. I think I should imagine that kind of scenario will not happen, simply because even if the rupee has to weaken, the Reserve Bank does have substantial firepower now to moderate the path of depreciation, which is the way it should be. It should not be in the business of just arresting a depreciation no matter what.
Okay, Rajiv, would you agree with that?
And one thing which I like to say is that, we think, CAD is always bad. Why that CAD is happening? Till the time CAD is happening because of gold, it's slightly bad. But if it's happening because of we're importing higher, oil or other imports.
What Mr. Dua is talking about, something like coal, iron ore, the kind of
these things are reflection that probably the recovery is going to take us not longer time. Probably we've started. It's going to starting, until the time local issues are sorted, we require more. That is why we are importing it. So I don't think so as far as rupee market is concerned, or broad picture for India is concerned, is going to be taken negatively, at least by investors. So if I am spending kind of more money on importing, one thing which I are forgetting is the electronics good. They are contributing huge amount to our imports. Now, what kind of trend that comes out, whether it sustains?
But, no, you think the government needs to intervene on that front?
No, government doesn't need to. See, government intervention is the last thing which is required at this point of time. I mean, because market has to find a way of its own. The government can only be facilitating in helping us improve exports. I mean, there's no need to finally gold will have to
question. The question, the concern is that there are a lot of imports which are happening which can be locally manufactured. That is where the Bhanum.
Yeah, I think, we have been talking about this gold. Coal as
coal and iron ore as
coal, we have been talking about it. We knew that coal is one sector which can drag down the economy, and we have been seeing
even now the coal bill which has been passed in the parliament, that will take some time to actually be implemented.
See, I think we need to take a different view on the rupee. I think one needs to take a short-term view as well as the medium-term view. What Rajiv is talking about, a short-term view on how the the rupee is going to play out by the end of this year. But what Renu and Mr. Dua is talking about is a medium-term thing.
Right.
So I think my view is that, of course, Reserve Bank is at the moment comfortable to protect any kind of untoward volatility in foreign exchange market. But I think it all depends on how the government is going to manage this whole policies in this winter session.
Right.
So there are a lot of expectations.
Winter session is almost coming to an end.
So there are a lot of expectations on the government and to come out with major policy decisions. I keep hearing that there's going to be some ordinance route on many of these bills. So if all these things can happen, the medium-term stability, I think, is ensured. Otherwise, we might see a kind of disturbance that we have seen in the past. So overall, I mean, short-term, yes, there are disturbances because of transitory, kind of episode that's happening around the world. But in the medium term, RBI is in a much better position.
No, but RBI is in a better position. But what about the ruble crisis? How much will it affect us? How much are we dependent? Are we going to be watching what is happening to the ruble?
But the ruble market, I mean, I am not really sure whether we are trading in the rupee kind of. Rajiv may be in a better position to talk. But definitely being a biggest oil exporter,
right.
Any disturbance in that particular economy, and I think we do have a bigger trade relationship with Russia. But if the major disturbances in Russia should have definitely impact on Indian economy also.
Rajiv?
See,
do you expect the ruble crisis to hurt us beyond?
No, not in beyond the point.
Through trade channel, I'm talking about.
Yes, there could be some kind of readjustment, but if I look at the broader picture, that it has any ability to kind of realign our currency or impact our relationship with other currencies, I doubt. And secondly, I would say that some kind of positive impact. We used to call this BRIC. 1 year back, India was probably the country which was seen as the weakest link. Today, India is the only one which is standing out, whether it's China, whether it is Brazil, Russia, or South Africa. Each of them have. So the kind of flows which we might attract because of this four set of countries being slightly weaker is higher. So I don't think there is going to be broadly a negative impact. If at all, there could be some minor positive impact on our inflows, both on the equity side and on the debt side.
Renu, would you agree with that? We don't have to worry too much about the ruble crisis?
Yes. Let me just... I think from an export perspective, we have to worry, and not just about the ruble, but all falling currencies of oil producer countries.
Absolutely.
And that, what a depreciation does from their perspective is basically makes imports more expensive.
Right.
So that hurts India's export. So the export scenario is definitely affected, and that's a negative.
Okay, Mr. Dua?
Yes, I'm actually not so unconcerned about the ruble. The fact of the matter is we are a large exporter of tobacco, of pharmaceuticals to Russia. If you would recall, the day the Russian ruble fell by 11%, on one day, the value of the stocks of all the Indian pharmaceutical companies also fell in tandem.
Right.
Because we have a fairly large generic and intermediates exports of pharmaceuticals to Russia.
Right.
And some of these contracts were in rubles.
Right.
And there was clearly an impact the moment the value of the ruble came down. And we have a huge export, the kind of defense imports from Russia. The value of those, if they've been denominated, and all of them, to my mind, are denominated in dollars, not in rubles, those will increase considerably. So we need to be worried about what happens to the ruble. Russia is a large economy. It may not be the largest, but the fact of the matter is we are a large trading partner of Russia.
Okay.
However, the positive thing which I like to say, Girish,
is
that ever since the rupee started depreciating in the last 3 or 4 days of volatility, when we had about 3% volatility, our NRIs outside have availed of the opportunity to send a lot of dollars into India.
Okay.
Even last year, we were the remittances to India were more than remittances into China.
Okay.
We had $70 billion coming in.
So the NRIs are finally...
And if the rupee continues or if there is a volatility, our financing of the CAD, which was earlier an issue raised, becomes much easier because...
Okay, sir. Okay.
Added to that,
very quickly.
Added to that, the increase in H1B visas in the recent period should augment much more remittances in the coming months.
Okay, I think on that note we need to end, but it's a mixed bag. What will happen if the rupee falls further? There is a lot of international factors, as you have heard from all the panelists. We'll wait and watch how the government will manage this situation, which as some of my panelists say, are causes for some serious concern. Thanks to all my guests, Mr. Ajay Dua, Renu Kohli, Bhanumurthy and Rajiv Nagpal. Please keep watching. We'll come back with another issue in the big picture, same time tomorrow.